Here's silver. I have a few ideas to share with you, ideas concerning the very long term. Okay. Again, let me emphasize, no guarantees here, absolutely no guarantee. Sorry, I can't provide you any guarantee, but you have to be warned that things could change. I am doing my best to read all the signals, all the related direct and indirect signals that could help me to read the charts short term and long term. And I'm presenting to you my findings, but again, strictly speaking, there is no guarantee. Okay, I cannot be 100% sure. So let's now have a look. Is it possible that silver is starting now a bull market that will send it there? I mean, is there a case for that? I would say yes. I've now looked carefully around, and I think that there is a case for this eventuality. It's not out of question. Let's put it this way. It's not out of question. There are quite a few things that might affect the precious metals in the next 3 to 5 to 10 years. And I'm beginning to think that the situation with interest rates that are plunging into negative territory in more and more countries around the world is a fantastic thing for the precious metals, as you can imagine. Because if there is one thing that can support the paper money, is interest rates. That's the one thing that can more or less sort of stand behind the paper and support that so-called valuable paper money. But when that interest rate disappears, then it goes into minus. What is left? I'll tell you what is left. The paper. And it becomes more and more obvious to a lot of people that the central bankers completely lost it. They lost it, and they themselves, central banks around the world, are buying record amounts of gold, silver. Why would they do that? They're not going to do that because they want to dump in 6 months down the road. They think very long term. And very long term means that they see big trouble with paper money. And I looked at the interest rates not just in Europe, but also in the US. And we already know the Japanese has sunk. The Japanese bonds market sank into a pond that I don't know who and how they're going to pull out the sunken bonds market in Japan. And the European bonds market is heading in the same direction very quickly. Now, the last one that seems to me that is still standing strong, last big market, is of course the US. And US bonds market, if the bonds market in the US is flipping into heading towards the zero line, then I'll see absolutely no problem whatsoever silver absolutely taking off in a mad dash above 50. Okay, so this is long term. I don't really like to get married, if you like, with a long-term projection, because then it blinds you to alternatives, and that's not a good thing. It's good to have an idea what might happen, you know, but don't start taking this literally as a roadmap. Let's say there is a possibility out there that is going to shoot about 50 because the entire financial structure basically is collapsing, the interest rates are disappearing, there is nothing that's supporting the paper money, so obviously people are going to go into tangible things. Yes, inflation might come back. At some point the confidence in the paper money is going to, if it's not already, is going to disappear. And any crisis that would pop on the horizon, the central bankers, they know to do one thing. So far, they have shown us that they don't know to raise rates. They don't know how to manage the economy in such a way to hold normal rates. But they know to do one thing, and that's print. They know that is printing. They know to print. So at the next big problem, economic problem, crash or whatever, the printing press is going to be very busy. And I don't need to continue to explain to you what might happen with tangible assets. Okay, so if we look at the chart of silver here, we have a situation that could turn into an A, B, C, D, E, either ending here or here. If this is an A, B, C, D, E, in fact, and not the structure that I have advocated for quite some time, that could be an A, B, C, and then it will go a lot lower. Okay, if this alternative doesn't play out, and in fact it turns out that this is an ABC, A, B, C, D, E, terminating here or here, there is nothing in the world stopping from silver over the next several years shooting towards 50. Okay, evidently that's going to be a huge earthquake across the currency market, of course, shake the foundation of the dollar index, the dollar, US dollar here. Okay, so that is in general the idea. I want to quickly go now to the weekly scale. And of course, you see the 1 and you see the 2, which is also feasible. Okay, there is no technical objection to that. That's perfectly possible. And that could play out as a 1-2 when we're going up in a third wave. Okay, this is the same wave count that I've been working with for quite some time. 1-2, we are probably finishing now the second wave of the tiny 1-2 inside that big third wave, and up we go. So let's go now to the daily. That's 1-2, and that could play out nicely as a 1-2. If the second wave terminated here, don't look back, it's just going to continue to power ahead. If it needs another wiggle or two to finish, then we might have to be patient for, let's say, 2-3 days, 2-3 trading days. I'll show you, this is the 60 minutes. If you remember, I had another alternative that it should go straight up. It didn't, it came down actually during the week. I showed you that, and you see, remember this line, it came down, and I said if it comes down, it will favor potentially the following structure. That will be an ABC, that's an X, that's an ABC, probably terminating here with a failure, and then the run up here should be taken as an ABC, which will serve as another X, and then look what it did, it went down straight on my arrow here, so that could form an A, that's a B, and we need just one more wiggle, sort of declining to take the stops from here at around 1502, and that could be it. And that could be the end of the second wave, even if it goes down to 14.9. I don't think it's going to go much lower than that. But if it goes down to 14.9, it will clearly set up an ABC, X, ABC, X, ABC. Okay, and then expect it to reverse sharply higher. Mr. Market doesn't listen to me and doesn't like to correct anymore. Mr. Market is busy. He wants to go higher. What do we do? At that point, I will treat this as 1. That's 2. It's up in a third wave. Silver running towards 15.5, climbing above the previous high here. Don't look back. It is in a 3 of 3. It will just fly. Just run higher. Now this is gold. That is the long term of gold. That's the quarterly scale. Quarterly scale. Every bar that you see here stands for a quarter, and you can see that it is now above this critical level that I had for a long time. It was kept under, and now it managed to right above that. We got one quarterly close above that, and we are heading for a second quarterly close above that, which is extremely important long term. Okay, the significance of this is going to be with us for quite some time. And also in the case of the chart of gold, I would suspect that there is a case for a possible A, B, C, D, E. In fact, that it might have ended here. Okay, I repeat that could be an A, B, C, D, E. You might get confused seeing another A here, so I'll explain to you the difference. If you remember, we had this as an A for quite some time, the big black A, and we said we are actually in the structure of an ABC. Do you remember that? ABC, and that here is the green one. Yeah, you had this as a B, that's C. Do you remember? And we had an A. It's hiding here. Yeah, so we had an A, B, C, and then we said, well, it's gonna come plunging there. It's gonna come plunging there. We didn't know how far it's going to go, and that will deliver the C. Okay, that was one very big alternative that I've been working with. It is perfectly technically possible. Okay, so don't write this off. It is possible. No guarantee it's going to break this level substantially, but it is technically still there. Okay, now what I'm saying from my scouring around for signals, insights, etc., I begin to suspect that maybe this is in fact going to form a base for a rally that could last between 5 to 7, maybe 10 years right from here. Okay, and you can see we are talking big scale. That's the quarterly. Yeah, it's been correcting now since 2011, and if we started the rally somewhere around here, we have 8 years behind us, 8 years of correction. That should tell you immediately that if we're going to a very powerful impulse wave, it should be measured not in 2 years, because after an 8-year correction, you're not going to have 2-year impulse wave. No, it is normally in echoing the scale to which it relates. So an impulse wave that comes out of a base of 10 years should be measured in, let's say, 7 to 15 years, something like that. You get the point. Yeah, it should be more or less the same scale. I want to go to the monthly, and here's the spectacular jump that we have seen here. And right now gold is doing perfectly normal thing that you would expect from any market that managed to overcome multi-year overhead resistance. This is very significant, very significant. Let's go now to the weekly. And we have seen it going sideways now for about 1, 2, 3, 3.5 weeks. Perfectly normal. Let's go to the daily. And we have a situation here that could be setting up the stage soon for a break above 1440. Okay, so I see here an ABC. I'll have to go to the details for you to see that. If it is morphing into a triangle, fourth wave, there is a way of treating this as a 1, 2, that's a 3, that will be a fourth wave. Okay, fourth wave relating to the 1, 2, and the entire thing here will be a third wave, not ending here but ending here. That will be your fourth wave on this scale. Okay, and then you go up for the fifth leg. That is one alternative. There is let's go to the 60 minutes. No, I prefer to go to the 4-hour scale. Yeah, I think it will give us better view. In the case of gold, we can work with this being an ABC. Mind you, that could turn into an X. That could be a 1, 2, 3, 4, 5, no problem. So that's going to be an ABC, straightforward. That's 1, 2, that's 3, 4, go up. That'll be the first leg of this new impulse wave. So that means gold has to run above 1440. Sorry, that will be a clear indication that we are in an impulse wave. Okay, any decline in the coming week, not having exceeded this level, certainly not having exceeded this level, but declining under 1400 should tell you that the correction is still ongoing, and it could indeed morph into that triangle that I just mentioned. Okay, so hanging around here, that should be taken as part of an ongoing correction